Where does the money come from? Federal budget 101. The federal government raised trillions of dollars in tax revenue each year. Thought there are many different kinds of taxes. Some taxes fund specific government programs, while other taxes fund the government in general. When all taxes for a given year are insufficient to cover all of the government expenses, which is often the case, the U.S. Treasury borrow money to make up the difference. Total federal tax revenues in fiscal year 2014 are projected to be $3 trillion. These revenues come from three major sources: income tax paid by individuals, accounting for 46% of all tax revenues; personal tax paid jointly by workers and employers, accounting for 34%, and corporate income tax paid by businesses make up 11%. There are also a handful of other types of taxes like custom duty and excise duty tax that make up smaller portion of federal revenue. Custom duty are taxes on imports paid by the importers, while excise taxes are taxes levied on specific goods like gasoline. This pie chart below shows how much each of these revenue sources are expected to bring during fiscal year 2014. Once they are paid into Treasury, income tax and corporate taxes are decided to as federal funds, while payroll tax become trust funds. Federal funds are general revenue, meaning Congress and the President can decide to spend them on just about anything when they conduct the annual appropriation progress. But trust fund can be used only to pay for very specific programs. The vast majority of trust fund revenues pay for Social Security and Medicare borrowing. In most years, the federal government spends more money than it takes from tax revenues. To make up the difference, the Treasury borrows money by issuing bonds. Anyone can buy Treasury bonds and in effect lend money to the Treasury by doing so. According to the Congressional Budget Office, the federal government is expected to borrow $616 billion in fiscal 2014. Borrowing constitutes a major source of revenue for the federal government. Down the road, however, the Treasury must pay back the money it has borrowed and pay interest as well. How does the federal government borrow? To finance the debt, the U.S. Treasury sells bonds and other types of securities. Security is a term for a variety of financial assets. Anyone can buy a bond or other Treasury security directly from the Treasury through its website, treasurydirect.gov, or from banks or brokers. When a person buys a Treasury bond, she effectively loans money to the federal government in exchange for the payment with interest at a later date. Most Treasury bonds are gives investor, the person who buys the bonds, a predetermined fixed interest rate. Generally, if you buy a bond, the price you pay is less than